Hey, what's up guys? Welcome back to the channel. I think we need to do an emergency video right now, and I want to give you guys a perspective of the severity of the situation. We are living through a historic time. The S&P 500 has just had its worst 3-day streak to the downside in modern history. This is very impressive given the fact that just a year ago, the sentiment in the stock market was completely the opposite. Everybody was buying stocks, everybody was bullish on the state of the economy. Inflation wasn't even that big of a concern. But now all of a sudden in 2022, inflation is on everybody's mind and everybody is focused on what the Fed is going to do, where interest rates are going to go, and what the 10-year treasury yield is going to do. And as you can see, because of that, today we experienced a historic day where almost every single stock in the entirety of the S&P 500 closed red. As you can see, we had a couple of stocks that ended up recovering near the end of the day, but this has not happened since 1990, 32 years ago. Guys, if you're still sitting on the sidelines in all this mayhem and you're buying into the fear-mongering media, I don't know what to tell you, because as an investor, this is a massive, once in a decade kind of opportunity. If you look at Twitter, if you look at social media, if you look at community forums, everybody is scared. Nobody wants to buy. And that is precisely what is causing this liquidity problem in the stock market. And because of that, the biggest fear on everybody's mind is the Fed. Now, the difference between what happened in 1980 and the difference between what's happening today is that in 1980, inflation actually gradually went up because of a systemic problem in the economy. But the difference today is that this inflation came out of nowhere, driven by stimulus checks out of 2021. There, I said it. There's a very simple cause of inflation that's currently going on right now. And it's not a systemic problem in the economy, which is the reason why unemployment is still at record lows. It's because we pounded a lot of money into the stock market in 2020 and in 2021, especially during the holiday season of 2020. People spent like crazy. That caused a big supply chain issue. And because of that, the supply chain issue has constrained all the way over into 2022, because obviously production is only now starting to get back to the levels of 2019. And that is the simple cause of inflation. And so the chances are we could see inflation go down just as fast as it's going up. Obviously, this is a very hot take, but historically speaking, that has what's happened. And because we're in this liquidity situation, this is causing stocks to go down much more excessively than they would in a regular stock market. And this liquidity problem is not arising because fundamentals of stocks are bad. This problem is arising because nearly every single asset out there has a lot of pain in it today. Even bonds are selling off like crazy. Today, the bond market had one of its worst days in the past 12 months. The TLT index was down 8% today, guys. Crypto obviously has already gotten destroyed today, with Bitcoin down 11% as of the recording of this video. So where do you think investors have the safe haven? Well, there is no safe haven. And that is precisely why we are seeing this liquidity crunch in the market, which is causing valuations of every single asset out there to go down more than it would have if it was a singular event in a singular industry. And that for me is creating an opportunity to buy. Yes, inflation is here. Yes, the economy could go into recession in the second and third quarter. But the stock market is forward looking. The stock market potentially is already pricing in the worst of this right now. And I think we could potentially be going through the denial phase of this so-called bear market. Now, the S&P 500 has officially just entered a bear market. But the reality is that the S&P 500 is way behind the rest of the market in the risk on phase. The Nasdaq has already been in a bear market for 2 months, and small caps have been in a correction since February of 2021, which is when inflation actually started to go up, yet big tech stocks were not affected at all. And so it depends on where you are invested in the market. If you're invested in high growth stocks in the small cap space, you could be much nearer to the bottom than, say, a Tesla, an Apple, or a Microsoft, even though that is the reverse psychology, right? Even though those are the safer companies. But in a rally mode, small cap stocks tend to recover ahead of the rest of the market. And that is exactly why small cap stocks or small cap stocks were the first ones to sell off in 2021. Again, that is just what I've noticed over the past 5 years. That's not what's going to happen over the next year or so, but that could be a trend. So my main motive to this video is just to ensure you guys that everything's going to be okay. Okay, even though in the short term everything looks like it's going to crash, the market is going to go down the drain, there is no hope. Guys, the stock market has recovered to some of the biggest historical events that are on a magnitude significantly worse than what we're experiencing today. We're not going through a global financial crisis. We're not going through 9/11. We're not going through a dot-com bubble where companies with zero revenue were trading at multi-billion-dollar valuations anymore, right? We're not going through a 1980s type of inflationary scenario where the dollar had no more value because we got off the gold standard, and that caused inflation in basically every single asset out there, which caused the Fed to be hyper aggressive. We're not going through that. We're going through a different situation. But history has always repeated itself, and this basic market cycle has always happened in the past. It's just that every single time it's happened, the recipe has been different. And we're going through that exact phase right now. And I think with the pessimism I'm seeing in the stock market, it's just making me just extra bullish because it gives me an edge as an investor who's buying the dip, right? Because the consensus is always wrong in the stock market. That is exactly why only 5% of people are actually successful in this game. If it was easy, everybody would be making money. But my argument to you guys out there who are in my comment section and on social media out there saying that, why would you buy this dip when the economy is going into recession, right? The market's in a bear market. Why would you buy this? Wait and sit on cash. Well, my argument to you guys is if you're not going to buy this dip and you didn't buy the dip 2 months ago, then when are you going to buy? Because the dip that's going to cause the bottom that you're waiting for is going to look exactly like the dip we're experiencing right now. So if you're not going to buy the dip right now, you're probably never going to buy the dip. And so you are automatically not really an investor at that point, right? At that point, you are simply a gambler who is just betting on where the market is going to go with no actual data and no discipline and no conviction. And because of that, I really think people are missing out on a wealth creation opportunity in this market right now. Now, obviously, not every stock is going to recover. But what I'm saying is if you're seeing good deals in the companies where you've done your research, where you have a valuation model, or if it's a growth stock in pre-revenue stages, you have a milestone model for the company over the next couple of months, then that is what's going to really pay in this kind of market. Research is going to pay. This is a stock picker's market, at least for when we start recovering, which nobody knows when that's going to happen. But it's not my job as an investor to wait until that happens because I will never know when that actually happens. So I just want to put this out there, guys. This is going to be a very casual video. I'm not going to go through any major stuff because obviously the next few days are critical. We're going to hear from the Fed, right? We're pricing in a 75 basis point and a 75 basis point hike for not only June and July, but also potentially September at this point, which is ridiculous in my opinion, right? The market is pricing that in. And the good thing is that the Fed's core PCE numbers didn't even come in as bad as the CPI. The CPI is driven by oil, which they can't control. And so one of the catalysts for the market to bottom could be that oil prices go down. So just keep that in mind. But again, in my opinion, like we've seen over the past 6 months, I think we could see like one of those sell the hype, buy the news kind of events going into this Fed meeting. I don't know if that's going to happen, but it could happen because we've sold off way too aggressively going into this meeting. People are pricing in the worst. And even if we get a 75 basis point hike, that could still rally the market because that's just how aggressively we sold off since Thursday. It's been ridiculous. And so what am I doing? You guys know already my take. I've been buying the dip, right? The market is still obviously going down. But again, I'm not going all in at one point, right? I'm slowly buying every single time we see these very big sell-offs to the downside. I'm not buying on the rallies, right? I'm not buying on the green days. I'm buying during these pull downs, right? The excessively red green or the excessively red red days, right? Those are the days that I'm buying on. And so if you have any takeaway from this video, it's that, guys, historically timing the market has never worked. Don't listen to the consensus. You will end up costing yourself a lot of money in the long term. I've lived through 3 crashes like this in 2018 and 2020. Although that's not a long time, it still taught me some valuable lessons. But anyways, guys, that's just my take on this market. I wanted to get this video out super quick because I think we really deserved an update. But yeah, I hope you enjoyed this video, and I'll catch you guys in the next video on Tuesday, and obviously after the Fed meeting near the end of this week. But anyways, guys, I hope you enjoyed this video, and I'll catch you guys in the next one. Take care.